and then it's trebled in size. It's up to 65 million now, nearly 70 million, and it's trebled in size in the last 3 4 weeks. I think people see gold miners as a geared play to the gold price. So if you want to get a leverage play to the gold price, the gold miners are the place to go.
Hello, you're watching Proactive. I'm joined by Hector McNeil, the co-CEO of Hun ETF. Hector, very good to speak with you again. It's been a very active time geopolitically over the past couple of months, and we've seen that reflected both in defense stocks, but also in the gold price, with the gold price topping $4,000 an ounce. Tell us about that, because you give exposure to gold, both through your gold mining ETF as well as physical gold ETC.
Yeah, it's funny enough. I don't know if I've ever told you, Stephen, but my previous company, my first ETF company I worked at was ETF Securities, and we were well known for inventing the first gold ETF in the world. And I actually said it on a call with a company today that when we issued that gold ETF back in 2003, gold was $318 an ounce. So just shows you how far the world's come since then. And I think actually, ETFs have a lot to answer for the rise in demand, because ultimately they make it very straightforward for people to put gold in their portfolios. And rather than you put it on, under the bed or in the safe, or dig a hole in the ground or whatever, you can safely go and buy your ounce of gold and buy it through a gold ETF, and that's where people have got 5 to 8% of their portfolio in gold now, and that's what I sort of pretty well recommend people to do anyway. It was very hard to do that before that. So we have both the physical gold side with the raw mints, and we've just got a smidgen under 2 billion in RMAU, which is our showcase gold ETC with the raw mints, and that's, I think, just under 1.65 billion. And then we created currency hedge versions earlier this year, and they're nearly 300 million now, which is we've done Swiss franc hedged, euro hedged, and GBP hedged. So obviously with Trump devaluing the dollar so aggressively, those are great trades to put on. And then, as you quite mentioned, we do have a gold miners ETF, which actually has been pretty dormant for a long time in terms of inflows. And then it's trebled in size. It's up to 65 million now, nearly 70 million, and it's trebled in size in the last 3 4 weeks. I think people see gold miners as a geared play to the gold price. So if you want to get a leverage play to the gold price, the gold miners are the place to go. What's really nice about ESGO as well, it does have an ESG screen as well. So we do screen out companies that we feel are not meeting that high standard. And obviously gold companies, there can be a lot of toxicity in mining, and that's where RMAU, the physical gold product, differentiates, because it uses recycled gold, which is 98% less carbon intensive than mine gold because of that toxicity, etc., and the logistics involved moving it around. And then you've got the other side of the story with ESGO, which is the gold miners. So we're very happy with both of those products, and we feel we've got a very curated offering in that space. Whether it's physical gold, whether it's miners, or whether it's currency hedged. There's 5 products there that are very interesting for people out there to be able to use.
So while the gold price has clearly benefited from geopolitical tensions, given its safe haven status, we've also seen defense stocks doing very well, and due to those tensions. You now have 3 defense ETFs. So you've got your global defense, European defense, and also the newest one to the addition to the family, your Indo-Pacific defense ETC. How is that done?
Yeah, no, I mean, NATO's obviously the global defense one is the which screens just for NATO companies, which is unique from that perspective. So, NATO's a defensive alliance, so we think that's really important, to have that sort of screen, because you don't want to be, having money in companies that are looking to invade everybody and be involved in that. So having the NATO screen we feel is important. It also gives an efficient capital markets way to invest and support those companies as well. We all know, the threats we have with the likes of Russia, Korea, and North Korea and China. So from that perspective, it's a great product. And then we have the Army, which is the European product, which again, is a couple of 100 million in. So again, almost 3.5 billion now in defense products. Return wise, we've been, at the 70% returns year to date. Now, I probably should have said before, ESGO actually has had 130% return this year, which is just insane, really, to see the geopolitical impact on gold. But that product's done 130% return. And then, as you quite mentioned, our newest product, which I think is one of the most interesting ones, is Indo-Pacific ex-China. So obviously that's countries, like Japan, like Australia, Korea, India, etc., that are, to some extent, the extension of NATO for that region, and obviously buttresses against the geopolitical dominance of China, and areas like North Korea, etc. So certainly the performance has been insane for some of those countries. I think some Indian stocks have seen 500% returns over that time. And you probably saw over the weekend as well that Pakistan had a border skirmish with Taliban over the weekend, where over 100 soldiers were killed between the two countries. So I think in that Indo-Pacific region, we're one geopolitical event away from that product being a couple of billion as well. I somewhat think if it'd been around, when the India-Pakistan war had been in place, then it would have seen a big intake from there. But Quad is a very exciting ETF, and I think rounds out our defense offering as well. Funny enough, we've just added to our tech megatrend product, iTech as well, which has got 8 megatrends, including things like cloud and social media and transport, etc. We just included AI and quantum computing and defense tech to that basket as well. So you get those 8 megatrends all in one go. We think by adding defense as well, it's sort of updating that index to be representative of what's going on. So we've got 4 products in that space today, and we think with gold and with defense, you're pretty well hedged, against dollar devaluation and geopolitical events, which seem to be the order of the day at the moment.
Yeah, it looks like may continue to do so for quite some time. Hector, as always, thank you very much for your time.
Thanks very much, Stephen. Appreciate it.
Hector McNeil, the co-CEO of Hun ETF.